So I've got to admit, this is not really my strong point, but what can you tell me about VAT and what is it?
Okay, so VAT, value added tax, albeit it doesn't feel like much value is being added for clients. VAT is a form of tax that's normally charged on what's described as the consumer or the end buyer of a process. So what you'll find is that VAT is at different rates. That can be at the 20%, which is traditionally what we see on a lot of products that we buy on the high street. But with regards to property investors, there's 3 other rates that are very important to be aware of. There's something called exempt, so no VAT charged, 0 VAT, which again, no VAT is charged, and reduced rate VAT. Now, reduced rate VAT is typically 5%. We can talk about that in a bit more detail in a moment. The big issue with regards to VAT is it can be very confusing for property investors as to which rates of VAT apply, or indeed do they need to be registered for VAT?
Yeah, and I think that can be confusing to advisors as well sometimes. It is a minefield of working through that, isn't it?
It is indeed. So for many of our property investors who are running what I will call a classic rental, so renting out to families or to HMOs, they will not need to be registered for VAT because that kind of activity, that kind of income stream is basically VAT exempt.
Exempt, so that's sort of your standard single lets, buy and rent out, or HMOs, things like that.
But you can still, as that kind of property investor, benefit from reduced rates of VAT on things. So a lovely example is where, for example, you are converting a property from a traditional rental, so a single family let, into a HMO, so a house of multiple dwelling. If you have a builder conduct that work, under certain circumstances, you can have the builder charge you VAT at the 5% rate rather than 20%. There's a little bit more detail around to make sure you can actually benefit from that. But there are ways to make sure that VAT is as minimal and painless as possible for you.
Yeah, and I've seen personally circumstances of that whereby builders, not knowing the rules, and other accountants not necessarily knowing the rules, have converted a property myself and sort of got that into an HMO, asked them to apply the 5% rate and add resistance and refer sort of relevant sort of advisors and accountants to the VAT Notice 708, which is all that's based around, and subsequently add the refurbs at 5%. And it's a big saving to make. It's literally 15% of your potential development costs or refurb costs.
Now, over and above that 5% reduction, or reduction to 5%, there are other reliefs as well. So I'm seeing more of my clients looking at buying commercial properties and then converting those into residential dwellings, maybe a block of apartments or a house of multiple occupancy. Now, on many commercial purchases, you may find that when you buy the property, you'll have VAT added as well. So some owners will do something to the property which will enable them to charge VAT on the sale of the asset. And of course, if you're buying it to convert it into residential, that makes it significantly more expensive. So one of the ways to minimise that is there's a kind of relief you can secure if you're going to convert that property into residential pretty much on purchase. And it's the use of a very simple form from HMRC referred to as a 1614D, and the completion of that and handing that on to the person you're buying the asset from can actually mitigate the full value of VAT on the purchase price, which can be hugely beneficial.
And that officially de-ops the building to tax, is that right?
Exactly. If you don't do that, of course, and you end up paying the VAT, you can't claim it back, and that's an issue that many clients don't understand. They think there's going to be a way they can claim it back, but unfortunately they can't. And to add injury to insult on that, then of course they're going to pay that awful stamp duty land tax on not just the purchase price of the asset, but also the VAT portion as well.
And it's a good point to make about the rates, particularly with the reduced rate of 5%. It's important that clients get that invoice right up front. It's not something you can claim back at a future date or be VAT registered and claim it back. The builders, the subcontractors have all got to invoice you at the 5% rate. Rather than trying to claim it back as a later date.
With many things in UK tax, you have to get it right at the front end. You can't retrospectively correct things.